Back in the action here once again. It's about that time of day again here, folks. Time to get back to work. It's Thursday evening. It's September the 5th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time today, please be aware I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job is extremely important tonight. My job tonight is to help you guys identify the best levels of support and resistance, the best entries and exit points tomorrow, and most importantly, some of the most important traps to avoid for tomorrow. That's Friday's trading session. And we have a lot to talk about tonight on this video newsletter. First of all, we get some big news right around the corner tomorrow. Two big news events tomorrow. We'll talk about that in a moment. Then we'll open up the charts. We'll grab some crude, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in here first, the black gold, the Texas tea, the crude oil futures, because oil went all the way up and then right back down again, and it's almost as if nothing happened today. Let's open up that chart, put this plan together for tomorrow. And of course, like I mentioned in last night's newsletter, we were expecting to see a bit of a range-bound market here today. That's exactly what we got until, of course, just after the markets opened up in the U.S., markets start running hard here. Optimism out of trade talks, U.S. and China, more information right from OPEC, and of course the weekly inventory report. But they couldn't hold it, and you'll notice we come tumbling all the way back in. Like I mentioned, it's almost like nothing happened. It's almost like the day opened and closed in the exact same spot. Now, what does that tell you? Day opens up, day closes in pretty much the exact same location. It's a range. It's a range. And so we definitely know we're still very much a balanced market. Yeah, there was a little bit of craziness, right, up and down here, right? But we're pretty much at this point still in a range-bound market. Range-bound markets are really quite straightforward. I want to sell high. I want to sell as the market goes higher. I want to buy as the market goes lower. And I want to avoid the middle of that trading range. Now, of course, we do have a bear bias right now. And as you can see, I've got this hidden channel on here tonight that I'm looking to sell off of here tomorrow. We'll talk about a couple key setups. I've got two, maybe three entry patterns I'm watching for off the high of that channel. And then again, because this is a bear bias, I definitely want to be a buyer down here, but I have to be very careful being a buyer with an overall bear market right now. We'll talk about the one, maybe two different patterns to look for to catch that bottom down around 55 for a rally back up. And of course, on top of that, we'll talk about breakouts, sitting on hands in the middle. We're going to cover all the details here on crude oil tonight, so definitely stay tuned on more, right? Stay tuned for more on that tonight on this video. Over on the S&P, I'll tell you, S&P and the Nasdaq, and you're not going to hear me say this very often, but the S&P and the Nasdaq, we really need a little bit more information right now. What do we know right now? We know that we're bullish, that's for sure. That's almost the only thing that we know right now. You'll notice there's not a lot of real dynamics on this chart, right? Pretty much went straight up, straight down, pull back, got their measured move, and it's just been a mess ever since. It looks like this S&P is waiting on something. They really are. They're waiting on something, and that something's coming tomorrow morning bright and early, right? We're going to take a look at the calendar here in a moment, and we'll talk about what that something is. At this point, though, I'm going to treat this like a range until we know more information. And with that range, you can see I've kind of got an idea of where that range is. But at this point, I've got to treat this almost like a to be determined. I'm anticipating a range up here ahead of tomorrow morning's news. Ranges, just like we talked about oil, ranges mean buy low. Ranges mean sell high. Ranges mean stay out of the middle. But at the same time, though, I'm also well open-minded here to a 1, 2, 3 reversal and a sell back down. At what point could we start selling this market? We'll talk about the short side. We'll also talk about what to do if this thing turns sideways. And of course, obviously, with big news tomorrow morning. What if this market pushes higher? This is that rare occasion where we don't have all the information we need yet, and so time will definitely be on our side here in the overnight. We'll put a plan of the night here in the video though, so not to worry on that. Nasdaq is in a very, very similar situation. All we really know right now is we're bullish. There's a little bit of as you can see, a much better flag pattern here, and of course that flag is failing overhead right now. We'll talk about how that can be applied on the S&P as well. But at this point though, we do not have any bearish momentum. We're very much bullish here on the chart right now, and of course with that bullishness, right, going into that range, I want to buy low, I want to sell high, I want to avoid the middle. We'll also talk about what a reversal will look like, because I definitely don't want to sell this market right now, at least not yet. We'll talk about what a reversal will look like and when we know it's safe to be trading a reversal, and of course we'll also talk about what to look for as the market rallies higher as well. So up, down, and sideways on the Nasdaq here, and then over on the gold, the gold is not going to be any easier than the Emini and the Nasdaq here. Gold, all we really know right now is this bearish move lower. Gold got absolutely clobbered today. Strong bear momentum. You know, we talked about this last night on the newsletter. Usually when a market goes this far, this fast, in one single session, the next day is usually a mess because nobody dares to buy it, nobody's taking profit, and usually we'll start going sideways on that screen. You'll notice here there was a little bit of a little bit of a bear flag there showing up, but that has since now kind of fizzled out here as it goes sideways. Gold has some big news coming tomorrow, and so it's understandable why this thing would think about going sideways here right now. So we definitely know we've got this market most likely, I shouldn't say definitely, most likely going to be going sideways on this. Much like oil now, I want to sell high as the market goes up. I want to buy low as the market goes down. And of course, because there is that bearish bias to it, it'll be a much different pattern to sell high than it will be to buy off of that low. So definitely make sure you stay tuned on that. We'll also talk about what a short covering rally will look like. That may definitely be in the cards here for tomorrow as well, and also too where some targets are if this thing keeps on bleeding lower for tomorrow. If you're a gold trader, definitely make sure you stay tuned for the full video tonight. And then of course over on that Euro got that beautiful 1, 2, 3 breakout into that hidden channel pullback. 1, 2, 3 breakout right into that hidden channel pullback up to that measured move. Excellent work right on that Euro today. Bottom line though is you can see that Euro pretty much ends up right back where we came from. We went up, came right back down. We know we're bearish at this point. We know the market's probably going to settle in here around this trading range. We know we're bearish. What does the range tell me to do? Yep, ranges tell me to sell high. We'll talk about a couple patterns to sell high tonight. They tell me to buy low, right? A couple patterns to buy off of that low as well. We'll talk about breakouts, and we'll talk about all the best setups that I see setting up here right now on the Euro for Friday morning's trading session. So we got the Euro, gold, Nasdaq, S&P, and of course crude oil. We're going to break all of this down into small bite-sized pieces. But before we jump into the video tonight, before we put all the pieces together with all the exact setups for tomorrow morning, I just want to make sure you never miss another newsletter. Make sure you join our mailing list, because every evening right before I publish this newsletter, I send out an email to everybody on our mailing list, and I want to make sure you get the first crack at this video every evening. And to join the mailing list, it's super easy. All you got to do is put your name, your email address, hit that subscribe now button, and don't forget, when you hit that subscribe button on the right hand side there, your job is not over yet. You still have to go in, check your email, because I'm going to send you a welcome email with a bunch of goodies in there for you, so you and I can get the most out of working together every evening on this newsletter. So don't forget, join our mailing list. All I need is your name, your email, hit that subscribe now, check your inbox, inbox. Check your spam filter too, because sometimes those welcome emails get stuck in your spam filter. I need you to open up that welcome email and verify your inbox so I can get approval to keep sending those emails every evening on this nightly newsletter. So make sure you join the mailing list. And then before we jump into the video tonight, I always want your feedback. I'm always asking for help, right? Down in the comment section below, in your opinion, question for you, what's the most valuable part of this newsletter for you? Is it the news recap? Is it is it oil? Is it S&P? I want to know for you, what should I be spending more time on every evening on this newsletter? What would you, if you could do the planning over here for this newsletter, what would you do more of? What would you do less of, right? Promise, don't hold anything back. I want to know what you love, what you hate about this newsletter. So do me a favor, drop me a comment in the comment section below, right? Let me know what you love about the video. Let me know what you hate about the video. Let me know what you wish I would do more of in this video, because I'll tell you right now, I'm always listening. I'm always trying to make this the very best place to learn and earn right here on this nightly newsletter. So don't forget, drop me a comment in the comment section below. And while you're down there, guys, give me a thumbs up on the video tonight. If you tune in every evening and watch this video newsletter, give me a thumbs up. Hit that thumbs up button, because believe it or not, every time you hit that thumbs up button on YouTube, it helps to expose this video to other new traders who can certainly learn a few lessons here as well. So smash that thumbs up button. It really means the world to me by posting your comments, hitting that thumbs up button. Always appreciate you guys showing your support here on this nightly newsletter. And don't forget, if you have any questions, I'm always here to answer that phone call. I'm only a phone call away. Call that toll-free phone number in the upper right-hand corner, and I'm looking forward to answering that call. Maybe you have questions about the best brokers, data providers, charting software right now, or maybe you want to ask questions about how to get access to a free pass to our trade room or our free trading course. Call that toll-free phone number in the upper right-hand corner. I'm going to pick up that call, answer all your questions, and look forward to speaking with you. But in the meantime, though, let's get to work here tonight, shall we? Checking out the economic news calendar here this evening. Tomorrow, of course, is a finally Friday session. Tomorrow, of course, is Friday the 6th. Now, of course, Fridays are always early in, early out scenarios, so you're really going to have a good reason to be trading a Friday morning after 11 o'clock Eastern time. So just be aware of that, right? Fridays are always early in, early out scenarios, so you got to have a good reason to be trading after 11 o'clock. But most importantly, tomorrow, we've got the weekly, or should I say the monthly, employment report tomorrow. The first Friday of every 1 month, right? First Friday of every 1 month, we get that non-farm payroll report, and that is tomorrow morning at 8:30 Eastern time. Now, historically, markets are very slow and sloppy ahead of these reports. So if we're not getting much volume, we talked about the oil, we talked about the S&P and the Nasdaq, how they're very slow right now, right? It might be slow like that overnight as well. So historically speaking, and it may not be this time around, but historically, most often, the price action leading up to that number tomorrow morning will be very choppy, sloppy, very slow and sluggish. So if it's slow overnight, if you're in Asia, if you're in Europe, just be careful, because we may see the markets really waiting here, right, to what we're going to get tomorrow morning at 8:30. Then, very, very important, you're going to want to give this at least about 10 minutes after that news comes out tomorrow, because typically the price action will either be very, very fast and violent, or it'll be very sluggish and rangy after that news comes out. See, what happens is, you may remember that earlier this morning, right, we heard from the ADP employment report, which projected what the number is going to be for tomorrow. And they're expecting a pretty good number tomorrow, just shy of 200,000 jobs being added. So a pretty good estimate ahead of tomorrow's non-farm payrolls. The reason why this is important is because tomorrow morning, when that news comes out at 8:30 Eastern time, if the news comes out tomorrow morning within expectations, the market will have already priced in that news, and it will oftentimes sit quietly. However, if the news tomorrow comes out outside of expectations, either higher or lower, doesn't really matter. But outside expectations, now the market will go into a frenzy, right? Because now traders have to readjust their positions, because again, they've already placed their bets based on what they saw this morning at 8:15. So again, we saw news this morning at 8:15. That news gave everybody an idea of what that employment number will be tomorrow. That means the market's already priced in a big number for tomorrow morning. If it comes out as expected, expect the markets to be slow and sluggish for at least 10 or 15 minutes after the news comes out. If it comes out outside of expectations, traders will have to adjust, and that's where you start getting some big moves after those news reports. The moral of the story, the actionable information, what you need to be aware of is in the overnight session, don't force it. It's oftentimes very slippery, very sloppy, very slow because everyone's waiting for the news tomorrow morning. Okay, tomorrow morning after that news comes out, just remember, give it some time after that news comes out. If it comes out outside of expectations, it'll oftentimes be very, very volatile. If it comes out within expectations, it will often be very slow and sluggish. Both scenarios, you've got to be patient. Wait for that news number to come out at 8:30. 8:35, 8:40, you'll have a better idea of what the structure looks like, who's got control of the market. And tomorrow morning in our trade room, we'll open up at 8 o'clock Eastern time and we'll have a front row seat for the fireworks tomorrow at 8:30 Eastern time. So don't forget, news tomorrow morning, 8:30 Eastern time. We also have that Jerome Powell speech tomorrow around 12:30. I don't think that's going to impact us too badly because, again, you're going to want to be finding your setups as early as you can tomorrow morning at the opening bell. So again, got to have a good reason to be trading a Friday afternoon. And of course, with that Powell speech on Friday afternoon, probably not going to be in the markets that late tomorrow morning. So again, careful around that news tomorrow, right? Careful in the overnight session tonight. Hopefully I'm wrong. Hopefully we get a lot of good price action overnight for you guys in Asia, in Europe, but don't hold your breath and don't force it, right? Don't force trades before that news comes out tomorrow because typically you don't want to spend all your bullets in the pre-market tomorrow when you want to save them for the nice big breakouts, nice big volatility we get after that number comes out tomorrow morning. And again, right, tonight we'll go over the charts tonight. Tomorrow morning we'll trade those charts together starting off at 8 o'clock Eastern time in our trade room. All right, looking good here. Let's grab some charts here now. We got some oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. Jumping in first here now on the oil. Oil is bearish right now. And of course, headed back into that trading range from last night's newsletter. Remember, this is, of course, right, that big move up yesterday, finished into a sideways range. News comes out this morning. We hear from OPEC. We hear about jobs. We hear from China in the U.S. trade talks, and the market just runs with a nice strong run higher. We go through the inventory report. The buyers can't hold. They try once, they try twice, and the market dumps now back down into pretty much exactly where this whole party began. So at this point now, we're definitely back inside of a range, but we're mostly bearish right now, as you can see, right? As we're going lower, we're clearly bearish. We know we have a trending environment right now, which means I'm expecting to see a two-legged move of some sorts. I've got my eyes on this measured move. It will all depend on where we get that pullback. But the most important thing, though, is, right, is this range, right? Is this range? When it comes to a range, I use the size of that trading range to identify my sell zones, the size of that trading range to identify my buy zones. And really at this point, my goal is stay out of the middle. I want to sell high and I want to buy low. So let's talk about that. Let's talk about how we can sell high and how we can buy low. Most important thing, if I want to be a seller, I've got to find a level of resistance. So what I've done is I've marked up a trend line off of these lows. I fit it up to these highs. It looks like that fits pretty well, and that's going to give me a great area now to start watching for a sell setup tomorrow morning. And you can almost anticipate what's going to happen on this, right? As the market tries to go higher, goes up into the high of that channel, what will likely happen here is that moving average comes over. The buyers now will likely try to buy that pullback, going back up to retest that high. And if they fail, I'm looking for a failure setup right into those stop losses. So imagine now, again, we know it's a range. right? We know that what goes up will probably end up right back down into that range. Same thing down here, right? What goes down will probably end up right back up into that range. And so we know we're short-term bearish right now. So what I'll do is I'm going to mark up that trend line right there, bring it up to that high. That creates my key level of resistance. Now, when I get up to that level of resistance, though, I'm going to be up above the moving average. Now, anytime I want to be a seller and I'm above the moving average, I start looking for opportunities to sell into buyer failures, right? So I imagine now buyers go above that moving average. They try to buy the pullback, right, to the EMA. And of course, what happens, right? They fail because it's not a bull market. That failure pattern is always on my radar, and especially up around the high of that channel. Now, maybe we get lucky, right? Maybe we get a failure into a pullback combination. We don't always get the pullback, but oftentimes, though, that failure into a pullback combination will be a great setup there for us to sell off of that high. So that's definitely something I'm watching here for tomorrow. Selling up, right? Selling up around the top of that channel. Let this market pop higher, right? Get those buyers now to try to buy off the moving average, sell into those stops, grab that pullback, right, on the pullback, and finish off that move back down into that range. Failure pattern into pullback pattern as we go. Now, the next step is, again, we want to stay away from the middle, right? No trade zone right in the middle here. The next question is, how do we buy off the low? This is where it's all about momentum. For example, one scenario would be we keep going lower, right? We don't stop inside the range, right? We don't stop and go sideways here. We keep going lower. Now, as we keep going lower, what is it? We're very bearish at this point. There's a lot of momentum to the downside. So now, if I want to be a buyer here, I'm going to use a slightly different pattern now called a nested failure pattern, right? It's a slight variation of that failure pattern we talked about to sell off the high, but now on this one, I want to let those sellers try twice before I go buying it back up. And the reason for that is because of all of this momentum. So again, if we go higher, I can sell now into those buyers' stop losses relatively aggressive, right? I can be relatively aggressive because the overall momentum is bearish. And any buyer trying to buy a pullback in a bear market, the odds are not on their side. It's going to probably collapse right back down in. However, if we keep going here right now, yes, we do still have that range to worry about. And yes, I do anticipate to come back up around that 56 to 56.33 area. But now that momentum is way too strong just to use your simple failure pattern to buy back up. At this point now, again, moving average comes down. I want to see sellers try once. I want to see him try twice, and notice how I've got this drawn out, right? The 2-try rule on this, you want higher highs there because sellers will come in and they'll sell high, and they'll sell high. Let those sellers try twice. Once you've got them trying twice, now you know where their pain point is. Now you know where their sellers start to have pain, and now you know where stops are, and we're buying. What I look for is nice strong signal candle, right? Buying right into those stops for that move going back into that range. There's one more scenario, though, that I want to remind you about, and that is if we sit here and go sideways for a while. Okay, if we sit and go sideways here for a while, then we try to go lower, well, now that momentum isn't as bad now. And now I can use that straight failure pattern into pullback pattern combination and go back up into that range again. Does that make sense, guys? So a lot of this has to do with what happens inside the range, right? Do we go pulling back? If we do, I'm looking for that buyer failure back down in. Or do we run lower? If that's the case, I want to be a buyer down here, but I don't want to buy that much, right? I don't want to buy into a bear freight train. Let them try once, let them try twice, higher highs there, and then of course we're buying into those stop losses for that rally back up into that trading range. Or we sit and we go sideways, right? That balances out that momentum. Now moving average flattens out, we're going sideways here. Now we pop up, buyer failure. Right? Buyer failure, back down in, failure pattern, up above the top of that range. Or we pop down, moving average comes over, bears try to sell it, right? They try to sell off of that moving average. Where's their stop? We're buying right into that stop, right? Range bound market. Buy low, sell high, avoid that middle. Now, last question. What about a breakout? What's a breakout look like here for tomorrow? Well, really at this point, a bull breakout would be a 1, 2, 3 reversal. We get above the moving average and the buyers can actually hold that pullback. If that's the case, mark up the high here, mark up the low there, mark up that high. There is your sweet spot. And now I'm looking to buy off the low of that, right, of that channel. Breakouts are common, right? They're not taboo, right? They're perfectly acceptable, but we have to wait for them. We have to wait for them properly. Remember, you can't just buy a breakout or buy a pullback because you get a strong leg up. Because that strong leg will oftentimes fail, and we'll see that failure back into that range. Okay, you want to see it go strong, move up, pull back to the moving average, right, and strong move off that moving average. We call it a 1, 2, 3 failure pattern. At that point, I'm marking up that high, I'm marking up that low, I'm finding my sweet spot here at that low and buying that pullback. Where's my target? My target now is back up to retest that high. Right, that's my target as we go higher here. As we go lower, what would a breakout look like? Yeah, same thing basically. 1, 2, 3. Just show me proof. Just show me proof these sellers really have control right now. Because right now it looks like they went up and pretty much gave up and the price came right back to that range. So if we do go lower, moving average comes over now and the sellers can actually hold that and run. Okay, I'm in, right? I'm good to go. You're fine by me, bears. Now mark up the low, mark up that low, mark up that high now, right? And that's, of course, now where I want to be selling off of that high. Now, where's that target going to be if we do get this thing to continue here? Well, I'll tell you, that target is a ways away, right? That big move down for Thursday. I don't expect to see this all the way back down to that 54, but that would be the next objective if we can crack below this range. What I'm anticipating here is we go lower, we get that nested failure and back up. That could definitely be the big setup of the session here for tomorrow. Now, don't forget again, right? We're going to trade this strategy tomorrow in our trade room together. So make sure you come join me at the opening bell. And also, too, before I jump into the S&P coming up next, I just want to remind you, you can get a much deeper dive into all of these setups, failures, pullbacks, trap patterns, strength patterns, nested failures, 1, 2, 3 reversals. And what I'll do is I'll put a free trading course link in the upper right hand corner. Follow that link in the upper right hand corner. That will take you to our free trading class here at School of Trade, where you can learn my 3-step strategy, my favorite entry setups, and you'll see hundreds of examples of how we apply that strategy to our favorite markets. I'll also put a big red button tonight, right below the video tonight, on our blog here at Sideways Market. So if you're on the blog right now, grab that big red button right below me tonight on the trading blog. In the meantime, let's keep this party rolling. You grab that free trading course, and let's keep pushing here now on the S&P 500. Over on the Emini S&P, now I mentioned earlier that the Emini S&P and the Nasdaq are really at this point, we're kind of in a hurry up and wait environment here right now, just because we know that there's, we don't have a lot of information to work with right now. All we really know is we saw a strong move up at the beginning, right? We saw that very sharp pullback and a very kind of grindy, if you remember it, right? Very grindy move going higher, right? Kind of that FOMO, right? Melt up as we go higher. They get that measured move, and then it's just been a mess ever since, right? It's been a mess ever since about 10:30, right, this morning. So we know this market is definitely bullish. It looks like a bull flag right now. The problem with this bull flag, though, is you'll notice here, right, the bull flag, it doesn't really give us much to work with here. Normally a bull flag, right, would tell me here to get up, right, and buy off that pullback, but that's going to put me right at that high. So not a really great spot to be trading that bull flag here above that high right now. It's not going to give us a very easy spot for it. And I'm sure a lot of people will probably look at this and say, no, that's your flag right there, and that's already been a failed flag, right, and a collapse back down here. So I don't think this market is ready to be sold yet, or at least not here. I wouldn't sell here, but I would definitely expect to see much of a range here, though, on the S&P and the Nasdaq here for tomorrow. With that big news tomorrow morning at 8:30 Eastern time, I'm definitely anticipating, right, a range-bound market here. We don't exactly know exactly where it is right now, but it does look like that range will be somewhere between that 2970 and 2980 print. And again, really right now, it's kind of a waiting game here right now to kind of get that range filled in. Now, once I have that trading range, once I have my range, then tomorrow morning I'll be able to add in the buy zones below, right, the sell zones up above. We know it's bullish right now. And so really at this point, range-bound market, again, I'm anticipating a range. It may not be, but assuming though we do get that range-bound market here to be a seller off the high, you want that nested failure, right? Go up, buyers try once, buyers try twice, selling back down. Remember, nesteds are best when you're going against momentum. If you want to buy as the market goes lower, right, it's a failure pattern back up into that range. And then, of course, a reversal on this, right, would be a 1, 2, 3 reversal coming off the moving average. Mark that low, mark that low, mark that high. And then, of course, we're selling off of that hidden channel high, right? We don't want to get too aggressive trying to call a top on this market just because it's so darn bullish, right? Last couple of days have been very, very bullish. And of course, this morning's headlines between the U.S. and China trade talks really did not slow this momentum down whatsoever. So again, right now, anticipating this to be a range-bound market with a bull bias. That bull bias tells me I can look for a move lower. Moving average comes over. Seller failure off the moving average and buying back up into that trading range. Buying low and selling high. A trading range also tells me I can sell off this high, but because we're going against the trend, I want to use that 1 and then 2. We call those nesteds, right? This is just like buying on oil, right? Trying to buy that low on oil. Let those buyers try once, let them try twice, and we'll sell into their failure from there. At the same time, right, what does a breakout look like? A breakout, or in this case, a reversal, right? It'd be a 1, 2, 3 reversal. Strong move down, pull back to the moving average, mark up that initial low, mark up that low, mark that high, right? And we are selling up off of that high. What about a break higher here? How about a break higher? Yeah, same basic idea, right? Like I said last night, show me proof. We gotta get proof up here, right? 1, 2, 3, show me proof. Mark the high, mark the high, mark the low. I'm more than happy to buy that pullback, but I've got to see proof as we go higher. That big round number at 3,000 is a very, very easy target to assume here for those buyers tomorrow. So again, I'm anticipating a range-bound market. Buy low, sell high, seller failure into pullback, going back up into that range, right? Nested failure, up, 1 try, 2 try, and sell it back in. A nested failure, right? A nested 2-try failure for the sell off that high. If we do see this range develop, stay out of the middle. 1, 2, 3, breakout, mark up the high, mark up the low, buying that pullback up to that 3,000 big round number, or it's that 1, 2, 3 breakdown, mark that low, mark that high. We're selling off the high of that new channel. Where's my target? Target, of course, is back down to retest, right? Today's opening price, basically, right? All the way down at that low here. So relatively difficult for me to anticipate. Really at this point, there's not a lot we have in this chart right now. With major news tomorrow at 8:30 Eastern time, I'm anticipating a range. And again, be very careful with this in the overnight, because the overnight, we do anticipate this to be a relatively choppy overnight session because the news here tomorrow morning at 8:30, and then hopefully tomorrow we'll get that news out of the way and we can get some good setups here tomorrow morning in the trade room. Over on the Nasdaq's in a very similar situation right now. Nasdaq we know is bullish, but really after they didn't even get their measured move here, right? Strong leg up. They missed that measured move. You can see how close they were to getting that measured move, but obviously, right, they were not able to get that measured move done. We know at this point, and again, I really don't have enough information yet, but I'm anticipating a range-bound market. This will be a bull market, right, into a trading range. That means 1 try, 2 try, failure back up, right? Bears come in, try to sell off that moving average, buying into that failure, or trying to sell off that high up. What was it again? It was a nested failure, right? 1, 2, back down into that range. Let those bears try once. Let the bulls try once. Let the bulls try twice, selling it back down into that trading range. Or, right, is it a breakout? Breakout, of course, would be a 1, 2, 3 breakout, marking up that high, marking up that low, buying that, right, buying that pullback. And of course, at that point now, right, your next target now becomes that next measured move, because there really isn't much else up there, right? So if we do get that 1, 2, 3, the S&P is pretty easy. You got that big round number, 3,000, right? We got, round number there, but I doubt that's going to be it though. If we do get a 1, 2, 3, 1, 2, 3 breakout here going higher, marking that high, marking that low, buying that pullback here off that low, and then up to that next measured move, 79, 61, 79, right, half area there. And then of course at the same time, right, 1, 2, 3 reversal, right, strong move down, 1, 2, 3 reversal, 1, 2, 3 reversal, mark the low, mark the high, right, selling off that high. Where's my target to the downside right now? Yeah, target is down at that low of day today at that 77.17. So again, very difficult right now on the S&P and the Nasdaq, because we do need more information. Anytime I see this type of price action ahead of the Non-Farm Friday session tomorrow, I do anticipate this to be a sideways range-bound market. And of course, with that sideways range, right, I want to buy low, use that seller failure pattern to buy low. If they do hold that pullback off the moving average, fine, great. Now we're bearish, right? Now mark the low, mark the high, right? Sell off that high. Or as we go higher, up, want to sell. Again, it's a range, right? So selling high, but selling against the trend requires 2 tries, 1, 2, and then back down in from there. Or that 1, 2, 3 breakout, right? Mark that high, and we're buying the low of that new channel. So a great, right, really a great test of kind of endurance right now here for traders overnight. Be careful overnight here. Let this market develop. Get some more information, right? And again, be careful with that news coming out tomorrow morning at 8:30 Eastern time. Over to the gold here. Gold is, I hate to sound like a broken record right now, but gold is very similar here to the S&P and the Nasdaq. We really only know one thing, right? We know we're bearish. It does look like we're starting to go sideways there. Moving average flattens out, lower highs, higher lows. So it certainly does look like we have a bear market into a trading range. I was watching this as a possible flag earlier this afternoon, but as you can see now with that moving average going flatline on us, it's definitely going to be a range. Now, I don't want to spook you all. Actually, maybe I do a little bit, but gold is historically the most difficult market to trade on Non-Farm Friday. Now, I will be honest, over the last few months, the overnight session on gold has been pretty good before the Non-Farm Friday report. So like I said earlier, historically, we usually don't see much overnight before that Non-Farm Friday trade, right? That economic news. So we may not get that much overnight. Don't force it. But, again, if my memory is correct, the last couple months, we only get these reports once every month, the first Friday of every month. The last couple months, we have seen some pretty good overnight action on this. And I'm definitely keeping my eyes open here for the range. I'm certainly watching for a short covering rally, going back up to retest those highs. But I'll tell you, anytime I see this much movement in one trading session, it is probably going to go sideways the following day. On top of that, you've got that non-farm payroll number tomorrow morning at 8:30 as well. So a lot of this will be very much repeating myself in the previous charts. We want to, again, knowing it's a range right now, you want to buy low, you want to sell high, and I want to avoid that middle, right? Now, how do I buy low? It's a bear market right now, right? How do I buy low? I buy low by getting that run lower, That nested. You got it, right? Now, again, I'm going to give the sellers the benefit of the doubt. And it looks just like this, actually. We go down, the bears try once, the bears try twice, and you buy back up, right? Quick first target, stop goes to point of entry, and see how much you can get for that runner. So strong move down, right? Looking for that move lower. Want to see the bears try once. Want to see them twice. And again, I've got that one, I've got that two, right? You want to see two, right? Two tries from those sellers. But most importantly, you want to see higher highs, right? Higher highs on those sells. Once you've got those bears trying twice, now you know where their pain is. And now you can buy right into those stop losses off what I call a two-try nested failure pattern. And again, as I mentioned before here tonight, right, all of those setups are covered in a lot more detail as part of that free trading course. So make sure you check that out in the upper right-hand corner. Next up here, if we sit inside the middle, right, sit on hands, don't get wrapped up here in the middle. And of course, as we go higher here, really a lot of this has to do with the strength of how we pop higher. For example, I've got my eyes in this area here at 37 to 33. It's a nice modest pullback here. If we can go up into that range here now, right, up into that resistance area overhead, I'm looking for the buyers now to come in and try to buy that pullback. If the buyers can try to buy that pullback, I'm going to slip my order in right below that low and look to sell right into that failure. Remember, I can be a lot more aggressive on this because it's a bear market, right? So as we go higher again, assuming now this keeps going sideways here, right? Assuming this is a range, right? We go up. The buyers, of course, now try to buy the pullback, and I'm looking to sell right into that failure, right? So failure pattern, buyer failure pattern, up above the high of that trading range. Now, what would it look like if the market really jumps higher here? See, at this point, we've got this big move down. And before I call that a reversal, remember, reversal, they've got to hold that pullback, right? They've got to hold that pullback and give me a nice jump off that moving average. So a reversal is pretty easy. Strong move up, pull back to the moving average, and strong move off the moving average, right? That's very, very important. I want to get that strong move up off the moving average. That gives control now to the buyers. Mark up that high, mark up that high, mark up that low, and now I'm looking to be a buyer down at the low of that channel. Now, obviously, the target is back up to retest these highs, right? That 1565 area. So target's pretty easy here for the bulls tomorrow. The hard part's going to be that 1, 2, 3 reversal, marking up those highs, staying patient for that, right? For that pullback, right? So definitely keep your eyes open, right? For that 1, 2, 3 reversal. Now, at the same time, we may also see this market pop higher and then start to kind of pull back, right? And watch for that nested, right? Now, you might be asking, what's the difference here? The difference is if we go up in the sell zone here, right, 37 to 33 here, it's not going to be that big of a momentum push. So I can look for a sell just going straight into that buyer failure pattern. But if that push higher goes a little bit further, again, hasn't held the pullback yet, it's just a strong move higher. You're probably going to have a lot of sellers who are scaling into this move, and they're going to want to drop this thing back down to retest that low. The problem is, again, whenever we have a lot of momentum in one direction, we've got to give, in this case, the buyers the benefit of the doubt. Let them try a couple times, right? Let them try once, let them try twice, and then I can sell it back down into that trading range. Does that make sense? Right? So it really all depends on the type of pullback that we get. Let them try once to buy it. Let them try twice to buy it. Right? And of course, we're selling now after that second attempt, going back down into that trading range. Another thing you want to keep an eye on for tomorrow would be not the 1, 2, 3 breakout, but kind of a short covering rally breakout. What it would look like is a strong move up. The bears would try once. Higher high, that's the key. The higher high, the bears try twice. And really what you want here is you want that trap, right? You want that trap. Little trap low there. I call this a FOMO breakout or a 2-try breakout. I call it a FOMO breakout because that strong break higher has everybody, right, suffering from FOMO, right? The fear of missing out. What's going to happen is that first pullback will be a shallow pullback. That'll be the buyers taking profit. The second pullback, that's the one where the sellers are actually coming in and committing, right, risk on that trade. Once we get that trap low, remember, trap patterns are not just a move below, but you've got to see a nice strong signal coming off of that trap, right? So I want to get that trap low, and again, target is back up to retest, right, all of those highs. So a lot covered here. The most important thing, though, is that potential short covering rally. So to be a buyer on this, it's either going to be a 1, 2, 3 reversal, mark the high, mark the low, and buy the low, or it's going to be that strong spike up, the 1 try for the bears, higher high, 2 try for the bears, right? Bears try once, bears try twice, trap low, strong signal, and again, right, buying that trap low. And again, I'm just simply drawing on the chart right now, but if you want to see a lot more examples of these setups, make sure you grab that free course in the upper right-hand corner. Make sure you hit that big red button tonight, below the video tonight on our trading blog. Join the free trading course, right? You'll learn so much more about these entry patterns, and you'll really get all the rules, right, and get a good firm foundation so you can make the most of our time together every evening on this newsletter. All right, looking pretty good here, right? So failure off the high here, right? Nested off the low. All right, we covered all that. Tomorrow morning, we'll do it together tomorrow morning, 8 o'clock Eastern time. Last but not least here, over on the euro. Euro and oil are pretty much just twins here right now. These guys are pretty similar here. Just like oil, right, opened up within a range. We had that big blast higher. And of course, right, after 1, after 2, the market collapses, goes back down into that trading range. Now, at this point, it's easy to see the bears have control of this market, but it's also easy to see that we're right back to that range again. So I definitely want to be a seller, and anytime I have a seller, right, I want to find a level of resistance. So what I'll do is I'll mark up that trend line off the low. I'll bring it up off this high. Now I'm kind of making an educated guess on this because of that midline right there. So I'm using that midline as kind of my little hack on this to figure out where the top of that channel is. Right? That's a pretty easy technique, right? So if you're wondering, right, I just don't think we're going to get that big of a move higher. I just don't think we're going to get all the way back to that top. I think that's a little bit unrealistic right now for that euro. Maybe I'm wrong, right? Maybe I'm wrong. A little bit easier would be now, right? Let's kind of think of it maybe like that, right? Yeah, something like that. Use these levels, right? Use those highs here now to kind of plot that midline. Now that gives me something that's a lot more actionable here off that high. So just kind of reverse engineering where I want that channel to be based on what I have already on this chart. So now I know, again, I know I'm bearish. I know I want to be a seller. I want to sell at resistance. So I'm looking to sell off top of a channel, right? And of course, as we go higher here, it's pretty easy, right? We talked about this earlier on oil. I'm anticipating the bulls to come in, try to buy that pullback. When they do, it's a failure, right, into a pullback combination. Now, my target on these is always back into the range. Specifically on this, it'd be back to the opposite side of that range. Okay? The other target, though, would be that measured move, 1 leg and 2 leg. Obviously, that measured move, we don't know exactly where that measured move will be because we don't know how far the market will pull back right now. So definitely keep an eye on that measured move here for tomorrow. And again, it's a range overall with a very significant bear move going lower. So if you know, and even if we didn't even have the range on there, I would still be looking for this market to go up. Get those buyers now. Try to buy that pullback. I'm looking to sell right into their stops. Right, sell right into their failures, and then back down in. Right, that's the ugliest illustration I've drawn all week here. It is a Thursday night, right? Failure pattern into pullback. There we go. Bob Ross will be proud. He's looking down at me right now. This happy little chart I'm working on right now. Okay, so we got again buyer failure into seller pullback. Just remember, stay out of that range. Right? Stay out of that range. So if we keep going lower here and we just kind of grind lower, just wait patiently, go up, buyer failure, sell it back down in. All right, guys? Or, as I mentioned on oil as well, if we continue going lower here, I do want to be a buyer down here. But to be a buyer, I've got to really give those sellers the benefit of the doubt. Let them try once, let them try twice, once, twice, and then I can be a buyer going right back up from there. Makes sense? However, if we sit here for a while, then we make the move lower. Now that momentum has been absorbed, okay? Momentum now is not as bad as it was. Now I can take that straight failure into pullback combination and again, stay out of the middle of that trading range. What would a breakout look like? What would a reversal look like? Reversal would be 1, 2, 3 reversal, right? Now this again, you don't want to buy that first pullback. You want to wait and buy on the hidden channel. That'll be a whole lot more reliable setup for you to buy off that hidden channel low. Where's my target? Target's pretty easy. Back up to retest that high. Or we go 1, 2, 3, run. Mark up that low, mark up that low, mark up that high. Now you know where your channel is. We're selling off top of that channel. Where's my target? Probably that big round number at 10,000. If we can get through the big round number at 10,000, which I'll be very surprised if we get very far through it, right? The next big objective is down around that 09,500, right? About halfway to the next big round number, right? So if we can get through that 10,000, next stopping point now be that range down there from earlier on in the week. So euro and oil are very, very similar here. We know we're bearish. I want to be a seller with a buyer failure pattern off the high, right? I want to be a buyer with a seller failure because it's a range, right? If we sit sideways, 1, 2, back up. Or if we continue running lower, it's that nested, that 1, that 2, and back up from there. 1, 2, 3, breakout and reversal. Find that hidden channel, buying the low of that hidden channel. And of course, 1, 2, 3, breakout, selling the high of that hidden channel. And again, as I mentioned earlier, my job tonight is to find the best levels, the best locations, and anticipate the best entry patterns. But in all reality, again, with news tomorrow morning, be very careful overnight, as I mentioned earlier, and come out and see me tomorrow. We'll do it together tomorrow morning at 8 o'clock Eastern time. Or, right, if you haven't done so yet, grab that free course I mentioned earlier. Get the free course, learn the 3-step strategy, learn my 4 favorite entry patterns, right? That way you can make the most of our time together on this nightly newsletter. All right, wrapping things up here. Time will tell. Again, careful tonight in the overnight session. Hopefully I'm wrong. Hopefully we get a bunch of good setups overnight for you guys in Asia and Europe, but don't hold your breath. Be careful ahead of that news tomorrow morning. And then don't forget, after that news comes out tomorrow, give it 5-10 minutes, let the dust settle. And of course, I look forward to seeing you there with me tomorrow morning, every morning at the opening bell at 8 o'clock Eastern time. Don't forget, if you want to get registered and come join me tomorrow morning as a brand new member, right below me tonight on the homepage here at schooloftrade.com, there's a big red button there for the advanced course. Join the advanced course, get registered, go through orientation, and I'll see you tomorrow morning at 8 o'clock Eastern time. If you're on the website right now, it's right below me. If you're on the blog, it's the big red button below the video tonight. If you're on the YouTube channel, everything's linked up in the description below. If you're not ready yet for membership, that's no problem at all. I have a great free trial here at School of Trade. The free trial has your free trading course. It's got a free pass to attend our trade room, hundreds of examples of how we apply their 3-step strategy to our favorite futures markets. You'll love the free course. Grab that free course either in the description of the YouTube video or in the upper right-hand corner, right, of this lesson tonight on the YouTube video. Guys and gals, always great to be here with you guys. One more day tomorrow, Friday morning, early in, early out. Look forward to seeing you tomorrow morning at the opening bell, 8 o'clock Eastern time in the trade room. If not, come back and see us next time. The next edition of our newsletter be next Monday evening around 7 o'clock Eastern time. As always, my name is Joseph. Be well out there. Be nice to each other. Careful here overnight. And we'll see you guys next time. Adios, amigos. Bye-bye for now.